Hello and welcome to Business Incorporated. Thank you for joining us. I am Bolaji Akinwale. This week on the program, we'll take a look at the Pension Reform Act of 2004, looking at the pensions market in general, and the plans by the government to establish a new bill to reflect changes that it is making at the moment. To let us into this development is Dave Uduanu. He is the chairman of the Pension Fund Operators Association of Nigeria. In this interview with Harriet Agbenyi, Dave Uduanu explains the importance of improving on the current acts. But before we bring on Dave, we will check on the headlines for the week. The International Monetary Fund has predicted that Nigeria will face political and economic risks if the security problems in the northern parts of the country are not urgently controlled by the federal government and security agencies. In this last staff report that was presented in Washington, D.C., United States on Wednesday, the lender stated that insecurity was a threat to the country's anticipated strong growth to be driven by agriculture, trade and services. Killings by Boko Haram insurgents in the northeast, as well as attacks on communities by Fulani herdsmen and unknown gunmen in other parts of the north have increased lately, even as fears are mounting over possible violence in the run-up to the 2015 general elections. The IMF report stated that growth is expected to remain strong, driven by agriculture, trade and services. Inflation should continue to decline in line with a tight monetary policy and a lowering trend in food prices from higher rice and wheat production. Key downside risks are persistently lower oil revenue from changing global dynamics and lower domestic production, less prudent fiscal policy through the ongoing political cycle, ongoing security problems in the north, and uncertainty about the pace of global recovery. In the summary of the report, which was posted on its website, the IMF stated, despite recent strong non-oil growth, poverty and income inequality remain high and social and governance indicators are below averages for sub-Saharan Africa. Structural reforms under the transformation agenda are ongoing, but significant infrastructure gaps and weak institutional capacity still retard growth prospects. The Central Bank of Nigeria has published its exposure draft guidelines for licensing and regulation of financial holding companies in Nigeria, calling for comments by industry stakeholders ahead of its having a binding effect. Such input must be received by May the 9th, deadline for the submission either in hard or soft copies. As part of the draft guideline, the Apex Bank is proposing that subsidiaries or other partners must not acquire shares of the parent company financial holding or sister firms within the group. This proposal is coming nearly 4 years after Lamidi Sanusi, as the Apex Bank governor, overturned the universal banking policy of his immediate predecessor, Professor Chukwuma Soludo, citing abuse of the policy. Those banking groups who still desire to keep non-prohibited subsidiaries were allowed to ring-fence the banks and then accommodate others in a financial holding company. As part of ensuring proper regulation of companies within the HoldCo by the board, the Apex Bank in the guideline plans to excise a banking subsidiary from a financial holding company group and ring-fence it into a monoline bank where, in the opinion of the central bank, the financial holding company is being run in an unprofessional manner that is detrimental to the interests of depositors and or other stakeholders of the banking subsidiary. According to the draft guideline, financial holdcos shall comply with the provisions of any code of corporate governance issued by the central bank for institutions under its purview and demonstrate evidence of the existence of competent and independent board with capacity to provide oversight or internal controls and risk management practices. They must also comply with the provisions of the Securities and Exchange Commission Code of Corporate Governance for public companies and listed entities in Nigeria. Stanbic IBTC Holdings has been able to record double-digit earnings growth in its top and bottom line. For the 3-month period through March 2014, Stanbic IBTC grew gross earnings by 13.7% to 30.22 billion naira from 26.58 billion naira in the same period of the prior year. Profit before tax on the review surged by 89.24% to 8.97 billion naira compared with 4.74 billion in the first quarter of 2013. Profit after tax followed the same positive trajectory as it spiked by 93% to 6.89 billion naira in 2014 from 3.57 billion naira in 2013. And based on the analysis of first quarter 2014 financial results of Tier 1 banks, the above figures is the most impressive.